What are the best ways to use your unemployment benefits? Let's talk about it on Kyle Talks Money. Job loss can throw our finances for a loop, even if you're a meticulous budgeter. You have to reevaluate your spending and your priorities, and this can be especially difficult because losing a job often takes a heavy emotional toll. There's no one-size-fits-all solution for surviving on an unemployment budget, but there are some effective strategies for how to spend your benefits, how to adjust your budget, and which expenses you should prioritize. First, let's see how unemployment benefits work. The Department of Labor oversees the unemployment insurance system, but each state administers its own program, sets its own rules, and provides most of the funding. A typical state unemployment program will place about half your average wages for up to 26 weeks during ordinary times, but benefits can vary widely. The CARES Act provided $600 a week for federal funds for unemployed workers on top of their regular state benefits. About 76% of unemployed workers were eligible to make more from unemployment than they had earned from jobs they'd lost. This weekly supplement expired in July 2020. A relief bill to assist with unemployment was passed in December 2020. It supplemented regular state benefits with an extra $300 a week, plus $100 for some self-employed workers, and it ran out through March 14, 2021. The American Rescue Plan passed in March 2021 provided an extra $300 a week through September 6, 2021. First thing to do is to plan for taxes. Your jobless benefits are taxable income for federal tax purposes, although this rule was waived in 2020 for unemployment benefits up to $10,200 for those adjusted gross incomes of not more than $150,000. You must report any unemployment compensation when you file your tax return going forward. You can elect to have 10% of your benefits withheld for taxes by filling out IRS Form W-4V, but this is voluntary. It won't happen unless you request it. There's no guarantee that 10% will cover your tax obligation, and you won't have the option of having more money withheld. 35 states also tax unemployment benefits. It might make sense to have tax withheld from your benefits if this would still leave you with enough money to pay your basic expenses and needs. This would save you some tax liability down the line, but not having taxes withheld is often the better move if you're struggling to pay your bills. If receiving untaxed unemployment benefits will prevent you from choosing a predatory loan or having to borrow money with excessive interest, it might make sense to avoid withholding and to owe money when filing your taxes. It's essential that you file a tax return anyway to avoid additional penalties and interest, even if you can't afford to pay what you owe at tax time. Then, you need to adjust your spending. Consider which expenses you need for survival when you're creating an unemployment budget. You should rank expenses from the most to the least of importance. Groceries, mortgage and rent payments, utilities, and health insurance are essential. If you've been paying down credit card debt and face unemployment, shift the focus to more important bills and pay the minimum on credit cards if needed. Take a hard look at the expenses that show up at the least important end of your list and consider what you can cut, like a gym membership, subscriptions, or streaming services. You may be able to find ways to cut costs even on basic expenses, particularly groceries. Consider shopping at low-cost grocery stores in your area, such as Aldi. Food staples are often much cheaper there compared to regular grocery stores. Other options during tough times including getting groceries from a food pantry or sharing meals with family and friends. You may also be able to save on medications by switching to generics or using a subscription discount card. Third, prioritize your rent. It's essential to prioritize rent in your unemployment budget. A nationwide ban on evictions was extended by the CDC through September 30, 2021. But the Supreme Court overruled that extension on August 2021, ending the moratorium. The court's decision was made on the grounds that the CDC had overstepped its authority, and the moratorium did not prevent unpaid rent from continuing to occur. It simply ruled that tenants could not be evicted for not paying rent during that time. Landlords were additionally entitled to apply late fees, penalties, and interest to the periods that went unpaid. Tenants might have found that they owed a mountain of debt to their landlords as the moratorium ended. Landlords have been free to file or resume eviction processes like last year. Then you can ask for hardship agreements. Ask your bank or credit card lender for a hardship agreement if your unemployment benefits don't cover all your bills. Many banks are no longer advertising pandemic relief programs, but they still may allow you to spread out or push back payments on a case-by-case basis. You may be able to pause or reduce your payments for up to 360 days if you're a homeowner affected by the pandemic and your mortgage is federally backed or insured. But be warned, you'll be responsible for paying back any mortgage payments that you pause during forbearance. Next, you can build your emergency fund. Job loss is one of the primary reasons to have an emergency fund. Consider putting money towards this rainy day fund before you pay more than the minimum on your debt, if you have any money left over after taking care of the essentials. It will provide you with a safety net in the event that your unemployment benefits expire before you find your next job. Having a secure housing, keeping your utilities on, and maintaining adequate food and healthcare are all more important than paying off debt. Saving cash now helps to ensure that you can cover these necessities or unexpected expenses without going deeper into debt. Then lastly, focus on high interest debt. You can turn to your high interest debt after you have 3 to 6 months worth of expenses tucked away. Prioritize the debts with the highest interest rates. That will be credit card debt for most people. Payments and interest on student loans owned by the Department of Education were suspended through January 31st, 2022, but it was extended again to May 1st, 2022, an additional 90 days. Consider taking advantage of this moratorium to build your emergency fund, then pay down other debt that's accruing interest if you have federally student loans. Unemployment compensation is usually meager. Relief measures made benefits more generous than usual, at least for a while, but expanded benefits still don't stretch far enough for some people. It's essential to ask for hardship agreements and scrutinize your spending if your benefits don't scratch far or last long enough to pull you through the crisis. So how are you handling your unemployment? Comment your thoughts below. And as always, take care of your money.